The Focus Wealth system can make your real estate assets more valuable and increase the value of other assets you might have as well.
Let's look at the difference between paying cash for a real estate investment versus using a policy loan with a properly structured
cash value insurance policy using the Focus Wealth system.
So on the left, I've put the numbers together here. $100,000 purchase. This is just a single family home. We're showing 30 years that we're going to hold the property at $1,000 a month. I'm keeping the numbers very simple for the example today. So the first thing we look at is market value. What will the $100,000 home grow to in equity, in market value over that 30-year time frame? So I have a future value calculator that shows us the $100,000. Let's just assume a very conservative 3% appreciation value over the 30-year time frame. And it shows that the future market value after 30 years would be $242,726. The other thing that we want to look at is cash flow. And in this case, it's the $1,000 a month for rent over 360 months. That would give us our 30-year time frame. That would equal $360,000. So this is our cash purchase. We have to minus out the $100,000 that we purchased the home for. And if we take a look at the numbers, we have $242,726 plus $360,000 minus the $100,000 gives us a total of $502,726. So here's our cash method. Pretty good. Let's make the same comparison now using a policy loan. And remember,
by having the Focus Wealth system,
you control the cash value. It's liquid to you. You don't have to wait till you're 59 and a half to access cash. There's a lot of benefits that you get from this policy besides what I'm about to show you here. So let's use the same numbers. 100,000 purchase, the same 30-year time frame, and 1,000 a month. So we know that the market value, whether you pay cash or take a policy loan, it's completely unaffected. So the market value of the property is the same, $242,726. But cash flow is where things start to change a little bit. So if you take a policy loan, that means that you're going to have a payment that goes back to the life insurance company to pay off the loan. So that's going to reduce the $360,000 of cash flow. The way we look at that is with the loan payment. So we have our $1,000 a month, but out of that we now have to make this payment. So the life insurance company charges us a 5% interest rate over those 360 months, which is $536 that is now going to a payment. So we have to take our $1,000 a month, we minus it by $536, which now instead of $1,000 a month for 360 months over time, we take the $464 a month, times it by 360 months, and that gives us $167,040 in cash flow, $167,040. Right here, we may look at this and say, yep, policy loan, it doesn't work, because $242,726 plus the $167,040 minus the $100,000 does not give us $502,000. It's less than that. But here's where the policy loan really comes into play and becomes much more valuable than just paying cash. We have to remember that that $100,000 that we took as a policy loan, that money is still growing inside of the policy.
With the Focus Wealth system,
even though you have a policy loan, your full cash value is still earning interest. So that $100,000 inside the policy is still growing. So now we come back to the calculator. We're going to show it earning the guaranteed rate of 4%. And over that 30-year time frame, that money is still growing, and it grows to $324,340. We then minus out the $100,000 for the purchase and add things up. $242,726 plus the $167 plus the $324,340 minus the $100,000, $634,106. By using a policy loan for a real estate deal, you can see there's much more cash at the end of the investment. This is the power of a whole life insurance policy. It actually can increase the value of your assets. But wait, there is one more thing we want to consider. This looks fantastic, and we see the policy loan is better. But let's take it one step further. What do most people do with this $1,000 a month? They would put it in a savings account earning 0.25%. Some people do that, but most people actually spend it as income. Let's give them the benefit of the doubt and say they put it into an account earning 0.25%. So that money's going to grow a little bit. But what about this? What if you were a disciplined investor, an honest banker, and you actually took that difference of that $464 that we showed earlier, the difference between your payment amount and the $1,000 that's left over? What if you took that $464
and you put it back into your Focus Wealth system,
earning the guaranteed 4% rate of return? When we do the math on that number, look what happens. We take the $464 per month, take out the $100,000 here, earning 4% over 360 months. That's an additional $323,000. Now, to be fair, we have to take out this cash flow number right here. But instead, we now put in the $323,112. Now let's do the math. Here's the other option if we choose to reinvest the $464 back into the policy. $790,178. So regardless, if you choose to pay cash for a property, it will not be as valuable to you.
This is just one example of how the Focus Wealth system can enhance your assets.
There's many other opportunities out there. It can coordinate with business. It can coordinate with other major purchases you make in your life. Here we show the real estate example and how powerful
a cash value policy really is.